Welcome to the Legacy Leaders Podcast. Are you doing the best for your client to help them create their legacy? Are you creating a plan that goes far beyond finances to help people ensure that it becomes the driving force behind all decisions? On this podcast, hosts Katie Beth Hand and Stan Miller will help you with growing your practice and your clients' peace of mind. Together, they bring the best and brightest minds to share with you how to help your clients develop their best legacy. And now, here are your hosts, Katie Beth and Stan.
I'm Rod Hatley, and this is Legacy Leaders, and I have the privilege today to speak with Brett Hughes, who is a financial advisor with Centura Wealth Advisory here in San Diego. Brett, welcome to the program.
Thanks so much for having me, Rod. We're excited to be here.
Yeah, thanks for agreeing to sit in with us today. And let's see, so just tell us very quickly about your company, Centura Wealth Advisors, for those who may not be familiar with the company.
Sure. So yeah, thanks again for having me. So I am a wealth advisor at Centura Wealth Advisory. We are a San Diego-based registered investment advisor, and really all that means is that we're a third-party advisor that doesn't have any affiliations with the kind of the large broker-dealers, Schwab, UBS, Morgan Stanley, Merrill Lynch, et cetera. How we're compensated is really just from the clients that we serve. So I think that's really the distinguishing factor is our independence. We were founded in 2016. Today we manage right around 800 million in assets. We really bifurcate our business into two areas. One is investment management, and then the other one is in financial planning. And the specific focus on the planning side is in income tax planning solutions and wealth transfer planning solutions. And so I think that's a big differentiator for us, is really our focus on those two specific planning topics and looking to add a lot of value in tax savings across, again, income tax planning and wealth transfer planning.
Okay. Well, let's see. Let me just ask you, how did you get into financial advising? What got you into your career, if you can share that with us?
Yeah, it's a great question. So I've been doing this for 15 years now, and frankly, when I graduated college, I got a degree in corporate finance with a minor in investments, and I really didn't have any idea what I wanted to do with that upon leaving college. What I knew was I had a customer service background, basically grew up in the service industry, did catering for 10 or 15 years, and really liked working with clients directly, did a lot of party planning and just the dynamic of putting together events, working directly with clients and putting together a project or an output that both I was happy with and the clients were happy with was fulfilling. Mm-hmm. And then I had an interest in math and economics, and really I tried to find a way how was I going to blend that together, the client service component of things and my interest in math, economics, and market finances. And I really learned about being a financial advisor through Schwab and Vanguard at the time, and basically decided to start my career at Schwab and got the opportunity to work with basically retail Schwab investors on a daily basis early on in my career. And that really is just kind of further developed to wanting to build closer, tighter relationships with end clients and really help out with all of their needs, which over the time has gotten more complex as I've learned different things and different tools and the different aspects that go into building a financial plan. Has really kind of gotten me where I am today, being a certified financial planner at a independent wealth advisory firm.
Okay. Let's see. What do you enjoy most about what you do? And maybe on the flip side of that, what are you not so thrilled about, but it's part and parcel of what you do?
Sure. I think the aspect that I like the most is being able to take really complex subjects and very important subjects to clients and break that down into something that's simple and digestible, something easy to understand. And ultimately just providing clarity around what a client or a prospect's financial picture looks like today, how that relates to their goals on where they want to get to in the short term and the long term. And then ultimately being able to kind of sit in the driver's seat and helping them align their goals with where they are today and creating a path forward to achieving those goals. I think that's the aspect that I like the most, is just helping folks do that. I think the part that I maybe struggle with or find the least fulfilling in some cases is running across client situations where maybe they're attempting to engage me too late in the process, or maybe they've worked with another advisor and haven't gotten maybe the best advice to what's got them where they are today, and either not being able to help out because of timing constraints, let's say, or being in a situation where clients could have made better decisions earlier on that would have put them in a different situation today. And I guess where I'm going with that is oftentimes I find those conversations, it's more of a conversation around having the clients having to consider making some lifestyle changes, when if we could have gotten engaged earlier, or maybe just started the planning earlier in the process, we would have had more opportunity to be able to drive a plan towards meeting those goals, as opposed to really needing to reassess what those goals are and the feasibility in achieving those.
Okay, fair enough. Thanks for sharing that. What's an ideal client for you, or a referral for you, in terms of the kinds of clients that you like to work with, and where you feel like you can move the needle in terms of the value that you can provide to them?
Thanks for asking about that. I think it's changed over time, again, as skill sets have grown and as clients' needs have grown with the types of clients I've been able to work with. Today, what that client profile looks like, I kind of break down into three categories. The first category is clients with income north of $1 million per year. So effectively, our firm is based in California, San Diego specifically. We work with a lot of California clients. We do work with clients all over the country and world, but specifically, if you're a client living in California and have over $1 million of income, I can expect that your income tax bill between federal and state is north of $400,000. And typically, through the income tax planning work that we do, we can mitigate, reduce, or save in general 20 to 80% of that client's tax bill, depending upon that client's decision making at the end of the day. And typically we're able to do that in the first year, and then in subsequent years, again, based upon that client's decision. The next category I really break down into 4 Ds. That's death, divorce, disposition of real estate without a 1031 exchange, and disposition of a business. Primarily, I'm working with either real estate investors, real estate owners that have a large real estate portfolio, and you're either looking to remove some concentration, diversify, or in general, just sell some properties that maybe have gone through their life cycle in the portfolio. Or I'm working with business owners, and primarily, again, there we're focused on income tax planning solutions, sometimes wealth transfer planning solutions. And for those clients, again, we can typically save 20 to 80% of that tax bill. And I'd say for the business owners, it's typically north of 50%, just given some of the additional strategies that somebody in a control position has the ability to implement. And then the third category of clients I really just classify as individuals or married couples with large estates. So individuals with more than $13 million, and then married couples with more than $26 million typically are going to need some help with some wealth transfer solutions.
Okay. Let's see. Can you share maybe an example of a success that is really gratifying for you, and on the flip side of that, possibly maybe a case that just maybe the planning got undertaken too late, or what have you, and so it just wasn't the outcome that you'd hoped, or even the client had hoped to achieve. Can you share either of those stories with us?
Sure, and maybe I'll start with the not as great outcome first. Okay. So I had a client that worked with for really a 10-year period of time or so, from his probably late 70s to early 90s, maybe a 15-year period of time. Okay. And he had come to me already having some other professionals in his life, an estate planning attorney, a CPA, and those individuals had served him for a number of years.
Mhm.
And he had already had an estate plan set up. He had already had his taxes kind of in order. And really what he had come to me for was investment management. And our process is very holistic. So even if a client comes to us and their stated need is just to manage their investments, we're still going to dive into a full process that we have to uncover all the facts, establish assumptions, and uncover the goals, and really determine, is the entire plan aligned with what the client's goals are, from the investments to the legal to the tax. And ultimately, in working with this client, what myself and some of my teammates determined is the client's estate plan really wasn't aligned as well with what his goals were as he thought it was. And then in addition, as a result of some of the legislative changes, specifically the 2017 Tax and Jobs Act, his estate plan really needed to be revisited. And what I found is I was able to get through to him on the investment side of things, and we were able to reallocate his portfolio and to create some alignment across the investments relative to his goals. But what I wasn't able to do was really break through some of the prior relationships that this client had with an estate planning attorney and a CPA, to really open up the conversation around other ideas or ways to potentially continue to address the estate that he had. And this client in particular had an estate over $30 million.
Wow.
And at the end of the day, based on his estate plan, had about a $7 to $8 million estate tax liability towards the end of his life. And there were several planning opportunities to mitigate what that estate tax liability could look like and create a better alignment across where the assets would ultimately travel to. This is a client that was, I think, on his third or fourth marriage, so had a few different sets of kids, one or two wives to contend with in this as well. And ultimately, there's really just a paralysis in wanting to move forward with any planning, I think, relative to potentially upsetting some of the family members, not 100% understanding, that there was possibilities to do some estate planning and not completely remove some of the control aspect. That was an important aspect for this individual.
Sure.
And ultimately, he ended up passing away a year and a half ago without making any of those estate changes.
Oh, no.
And it did result in about an $8 or $9 million tax liability, which I didn't like to see. And then certainly the G2, the kids, it was difficult to have those conversations and express why that tax liability existed and why it wasn't addressed.
Sure.
And in hindsight, it would have just been a lot nicer to be able to really have conversations with some of the other professionals that were involved in this client's life, really dig into what the goals were and what the current plan in place was, and talk about some different solutions.
Right.
And I think the client would have ended up with a much better outcome at the end of the day, as would the family members. So that was a situation that was difficult for me to work through, kind of felt handicapped, and got a lot of solutions I feel like can help. But at the end of the day, the client just wasn't willing to take those steps in progressing things. So on the positive, it does. And so I wanted to dovetail that into a positive outcome, because it was somewhat similar. And this was a client that was introduced to me about a year and a half ago. And this particular client, or clients, are business owners up in LA, and we're doing some pre-liquidity planning where they anticipated being able to sell their business or take their business to market sometime over the next 2 to 5 years. Mm-hmm. And they had been referred to us through their M&A banker, who we worked with in the past to help out some of his other clients in income tax planning solutions and wealth transfer planning solutions. And so this client, this was really a life-changing event. Prior to their business really kind of blowing up in value, this client didn't have a very large balance sheet. Their lives were not overly complex from a financial standpoint. And their business is expected to sell somewhere between $75 and $100 million. And so again, this is a very significant lifestyle change for them. And so the other professionals in these clients' lives, the CPA, the estate planning attorney, really didn't have the experience or expertise to serve these clients on a forward-looking basis. They did a really good job of completing the tax returns for the clients on a year-to-year basis based on the business at that point. And the estate planning attorney did a good job of drafting the estate plan, the revocable trusts, wills, healthcare directives, et cetera, based on the client's balance sheet and projections,
Right.
2 or 3 years ago. But as we start to incorporate this liquidity event, we really quickly realized that the other professionals didn't have the experience and expertise to really carry out a plan in line with the liquidity event that they were expected to go through.
Right.
And the clients really just didn't understand all of these different aspects. So I think the enjoyable aspect for me was really going through the education process of what estate planning actually means and what the possibilities, the outcomes could look like for a client,
Right.
as well as, how all of this affects taxes. And at the end of the day, I think, my goal is to try to keep the most amount of money in the client's pocket as possible, whether that's through the investment side of things, the planning side of things with estate planning or tax planning. All of this comes together and needs to be coordinated to drive to an optimal result. And it was really rewarding to be able to educate the client on how all of these different components go together and
Right.
drive towards achieving that really good result. And so basically from June of last year through December of last year, we did a lot in the way of estate planning and in designing different structures that would potentially move some assets outside of their estate to their 2 children, while also ensuring that we left enough capital inside or enough resources inside their estate that they're never going to have an issue in maintaining and living out their lifestyle. So what I think we were able to achieve is really a nice balance between maintaining their current lifestyle and their current needs, while creating a situation that's optimal from a tax standpoint and wealth transfer perspective that's going to benefit their kids, 20, 30, 50, 60 years down the road.
Oh, fabulous. Thank you for sharing.
Yeah, and those clients ended up actually getting an LOI for their business the last 2 weeks, and are expected to sell in the next 2 or 3 months. And
Fabulous.
exactly the planning work that we did seems like it's going to align well with the structure of the business sale. So this client is ultimately going to achieve a really phenomenal result, somewhere in the range of probably a $15 to $20 million tax savings, again, on a $50 to $75 million sale event is kind of where we've done the analysis and run the numbers.
Obviously, they're overjoyed in having worked with you. I'm sure they realize what value you brought to the conversation. So congratulations on that.
Thank you.
Let's talk for a minute. The phrase trusted advisor gets kind of bandied about out there. And I mean, I suppose all of us want to be looked at or looked to as the trusted advisor for our clients. That is that person that you would go to for, whatever recommendation, or, hey, I need in my case, for example, I've had clients reach out to me, look, our son got into trouble. Do you know a good criminal defense attorney who could help him, et cetera? And the answer is sure. Let me reach out to my network, and I'll find you someone, and I'll do a warm email introduction and, get you connected that way. So I suppose for, what does it mean to you? I mean, obviously it means different things to different people, but I'm always curious to know, what does it mean to the other professionals that I have the privilege to work with? And for you, what do those words really mean?
Great question, Rod. And I appreciate you walking me through kind of your example. I think that resonates with me when it comes to thinking about what does the term trusted advisor truly mean. For me, it's really being that person, being the go-to person for anything, any decision making a client is attempting to make in their life. And that can be a financial decision, it can be a legal decision, it can be a car purchase, it can be any kind of decision. But really my goal is to build enough trust with a client or a prospect that they know it doesn't matter what question they ask me, they're going to get an unbiased response that is in line with their personality, their goals, and generally in line with the way that they think about life. And so that's really what primarily comes to mind, is being that go-to person to bounce ideas off of, whether it's a financial related item or not, and the client knowing that whatever that answer is going to put them in a better situation or put them in contact with somebody that's going to put them in a better situation than they are today. Right. I think that that's kind of what resonates with me when I think about the term trusted advisor.
Okay, thank you. Let's see. What's the one thing that people should know about you as a wealth advisor? I know I'm putting you on the spot, and it's probably all order, but I'll ask the question.
So on the on the professional side of things, I think the thing that I think clients should know, the first and foremost, is I care deeply about client outcomes, and transparency and communication are two big core values of mine. And I think in any relationship, if you can have solid communication and it's a transparent working relationship where clients know what I'm doing, I'm proactive about reaching out to them about changes in economics, politics, legislation. I want to be that trusted advisor, back to that prior question that we were talking about. So I think the one thing that I would just want people to know is that I deeply care about the outcomes and really want to drive to an exceptional result, whatever that may be.
Okay. Let's see. I'll throw this out there as a question. To be a financial advisor, and I guess that's kind of a catch-all for what you do. What does it mean to be a financial advisor? Have you ever given any thought to that?
I have, and I think it's a great question, because that term is so general in today's day and age that, I think it just warrants some exploration. For example, the barrier to entry in this industry to be a financial advisor is not very high, meaning it's basically a couple of tests. You pass a Series 7 and 63 and Series 66 are really the three primary licensing exams that you need to have to be a financial advisor and, in quote, provide financial advice. Sure. But being a financial advisor, I think, is so much more than just passing the tests and having the kind of book level knowledge. To me, it's being able to understand and relate to what clients are going through, and being able to take that book knowledge, whether it be the financial planning knowledge, the investment knowledge that's acquired through a designation like the certified financial planner, and applying that knowledge base towards a client situation, and being able to optimize and drive towards a good solution for a client, or a solution that's going to be sustainable and achievable for a client. And I think that, that's sometimes hard to come by in a financial advisor. Some financial advisors are very transactional based, where it's just, let's look at, one point in time or one specific situation, and let's solve, whatever that one need is here. And I think a good financial advisor, whether a client comes to them for transactional needs or otherwise, is really going to take a step back and try to understand a client's holistic picture and drive towards really solving the client's needs at a holistic level, than maybe just answering a stated question or working on a transactional basis, if that makes sense. So I think, the term financial advisor, again, is just, it's so broad. I think, really a good financial advisor is going to be very comprehensive in the solutions that he or she is able to provide, and looking to really understand the client's investments, estate plan, tax plan, retirement plan, all of the different aspects that go into running somebody's life or household, focusing on that as opposed to just a transaction or, a single point in time.
Okay, thank you. Who are your best referral sources?
Another great question. So best referral sources end up being what I refer to as centers of influence. So that's individuals like yourself, Rod, estate planning attorneys, CPAs, maybe they're M&A bankers, valuation firms. They end up being professionals that ultimately I end up working very closely with to really drive towards those optimal results for clients.
Right.
And essentially, we don't have all the solutions and have all of the expertise. One thing that we've realized over the last 15 plus years that myself and other individuals have been doing this is we haven't gotten here overnight, and we've gotten here through a collaborative nature with other professionals. And so centers of influence tend to be our best referral source because they're working with similar clients that have similar needs. And in general, we're all striving towards finding these ideal or optimal solutions for clients. And we realize that we can drive towards those optimal solutions better when we partner with one another than when we're not working in kind of a conjoined or joint effort towards clients. So I'd say centers of influence first. Financial advisors, believe it or not, actually end up being a very good referral source for us. And I think that's mainly because of the differentiation that we have in income tax planning solutions and wealth transfer planning solutions that we strive, and specifically for the types of clients that we serve. What I found is most financial advisors, maybe 5 to 10% of their book of business is comprised of these business owners or these high net worth individuals that really have income north of $1 million, balance sheets north of 10 million to $1 billion. And what we found is these advisors' business models are good, but they're really not geared towards solving these high net worth business owner complex situations. And oftentimes these advisors either don't have the bandwidth, the resources, or in some cases, really the expertise, knowledge base to drive towards these complex solutions. And so they're willing to bring Centura into the mix, make an introduction to their clients to really drive towards that optimal planning solution that is joined with that investment solution. And we're happy to work with these financial advisors and doing joint casework and driving and helping them drive towards a really good solution for their clients. It's really a win-win-win for us. We get to do really good work, get to achieve an optimal solution for a client. We get to educate a financial advisor and a client in the process.
Sure.
And in turn, hopefully we have 2 raving fans out of that, the client and the financial advisor, and hopefully additional business sources as a result. And I'd say the third category is really clients that have become raving fans of our service. So most clients that work with us, I think taking a step back, we will only engage with a client when we're confident that we can add exponential value to the relationship. And if we don't feel like we can do that within the first meeting or two, we're just going to be honest with the client and let them know that, this just isn't the right fit for whatever reason. We can't provide the value that we would want to. And as a result of really having that mindset and that transparency with clients, we're able to really drive exceptional results. And in turn, clients become raving fans of Centura and tell their friends, family, other business owners about the experiences that they've had with us.
Sure.
And they become really good referral sources as well. So breaking it down, it's really centers of influence. So other professionals being the primary source, other financial advisors being a very close second, and then clients being our third best referral source.
Okay, wonderful. We're just about ready to close it up. Is there anything else that you wanted to share with the listeners that I didn't touch on, but that you feel sufficiently, would be valuable for them to know about either you or Centura, just in the remaining moments we have?
Sure. I think I just want to wrap things up by thanking you very much for having me on today's episode, Rod, and reiterate, I think the value and the importance of having a solid professional team around you as a client or a prospect. It's not just a financial advisor. It's not just a CPA. It's not just an estate planning attorney that you need to help make these decisions. It's really having all three of these individuals, and in some cases, additional professionals in the mix of everything to really talk with each other, coordinate with each other, understand what each different department of, if you will, is doing to ensure that everything is coordinated and driving towards, really a single solution to meet those client goals. So if I was just going to leave any parting words, I would just say, to make sure that you have the right professional team around you. And as you grow as a client, as your balance sheet grows, as your tax situation changes, just to make sure that you're always evaluating that and that your advisors ideally are being proactive in the help and advice they're giving you. And if for some reason you're just not feeling that it's a good fit, I think it's a good idea to shop around and ask the other professionals that are working well in your professional team if they have other recommendations of people to potentially augment the team with, so that you can continue, kind of your path forward and making sure that your plan is always optimized and staying towards meeting your longer term and short term goals.
Wonderful. Brett, it's been a pleasure to have you on the program today. Again, Rod Hatley of Legacy Leaders interviewing Brett Hughes with Centura Wealth Advisory here in San Diego. Brett, thanks again for sharing the time. I do appreciate it.
Likewise, Rod, thanks so much for having me, and enjoy the rest of your afternoon.
You've been listening to the Legacy Leaders Podcast with Katie Beth Hand and Stan Miller. For more information on them and the show, please visit pinnaclelegacylaw.com. If you like what you've learned today, do share the program with your friends and subscribe wherever podcasts are found.